for us.
Yeah.
All right. We're live.
It starts when we say it starts.
Yeah.
All right, let's cancel it tomorrow. We're doing this shit tomorrow.
Mazda Miata Corvette is here.
Dude, I fucking love that guy. He always comments on our Twitter.
I think he has a
Alright.
different name in Twitter though. I think his name's Jacob or something. But
No, it's Mazda.
sorry if I outed
Oh
you.
yeah, I think his like at is Jacob.
Yeah.
Okay, that's called doxing in America.
That is called doxing.
It's
That's a new word that's getting popular now.
pretty
Doxing.
common first
Yeah,
name,
for
bro.
real.
Tevis, what are you drinking?
yeah,
Coffee.
you're gonna be able to track down Jacob now.
Dex says forgot it was Friday. Michael, hi squad.
Nothing was going
All
on
right.
behind the scenes. You were just giving a Mitch shit for having bad thumbnails.
Put a W in the chat if you like this thumbnail. Put a L if you didn't like this thumbnail. It
Dude,
is,
he cut off the Santa Claus hat on the thumbnail.
I made it in like 20 seconds, so that's context.
Like, look at this guy's hair. Do you think he's really caring about the thumbnail? Like, he doesn't care anymore.
Yeah, like, bro. I remember the
So-
first episode. I was telling Tristan, I was like, "Yo, we gotta have a dope thumbnail." He's like, "All right, got you. We got a great thumbnail." Now I'm like, "Put a fucking Santa Claus on that bitch."
You have a videographer and you're still making shit thumbnails.
Well, to be fair, he's like sick today. He ate some. First of all, I don't know why people eat cheese. He had some bad cheese. Like he ate raw cheese because apparently that's a thing. People eat cheese, and that shit fucked up his stomach. So. He's,
What?
Yeah, like people
Apparently, people eat cheese.
No, like I don't like so people buy cheese and they eat it with crackers and shit. And I'm like, I don't get how you do that. Like, I can never eat raw cheese like brie and all that shit.
Oh yeah, that's a white thing.
That's definitely a white thing, bro. It's a white
Yeah.
thing.
Yeah, if you call it brie, it's definitely not your forte.
I was just about to say. Oh,
It's
like,
brie,
everybody
whatever,
knows this.
bro.
yeah, it's a new special kind of raw cheese. Yeah, I love it. I guess I'm the odd one out, but yeah. Anyway,
I love the hat.
why don't we
You're
talk
like-
about some SoFi here?
You're looking like Jason Bourne up in here. I love it. No, I
Turn a
love
SoFi
it.
podcast into roasting a myth.
Dude, that's actually like a good compliment.
Yeah. Yo, Tyler, not Tyler. Why was I about to say Tyler? Riley. The thing behind you looks like there's a wine glass on your
Right here?
left side. Yeah, that thing looks like what is that? That's like a lamp.
Can you guys guess what it is? I guarantee y'all are gonna be wrong. It's a
It
fucking
looks like a
riot
lamp,
shield.
but it's not a lamp. Oh,
It's
it's
a
a
riot
chair.
shield.
Oh,
My little
it
brothers
looked like
do
a wine
airsoft.
glass, bro.
Of course it is. Of course it is. My guy has a fucking samurai sword and a riot shield in his house.
Yeah.
I'm at a different house here, but yeah, it's a riot shield.
Are you at a different house for the holidays?
Yes, sir. I'm home with the family. I just got finished doing some presents with my nephews, and now I'm in my little brother's high school bedroom, doing the show with you guys.
Wow, that's nice. I stopped giving presents and stopped getting presents like 8 years ago.
Yeah.
But I used to get presents. It was nice. It was fun. It was cute.
Well, I'm the oldest in my family, so I feel like I have to outdog everybody.
You have to, yeah, you have to outdog them. Yeah.
I don't know how that feels.
I have to make sure that I'm better than them because they're getting to the age where they could beat me up now, and I don't like that power shift in the family.
Let me answer Jay's question real quick. Amit, why don't you talk about DNA anymore? I thought you said you'll buy more under 2. What happened, bro? So a couple things. I realized that biotechs in this macro are going to get destroyed, and I was right. It's got absolutely destroyed. So I sold out at 292 because it started to seemed obvious in October. Like I just like everyone got more data, and I was like, this is not going to get good. So the reason I'm not buying more is because biotechs underneath this macro are going to get hurt even more because they don't really have finished products. Not only are they losing money, they're going through like constant testing. And if their test fails, like, they can't even justify that they can lose money. So I'm bullish DNA long term, but it's going to take some time for them to. It's not thanks to Chris. It's definitely not thanks to Chris. I sold way before Chris had his thoughts.
Yo, Chris was going hard on that meta calls, right? I saw him tweeting about it this week.
Yeah, Chris is
Actually,
bullish,
speaking
but-
of, since we're talking about this, I actually don't know relatively speaking, what position SoFi holds in your portfolio, like percentage-wise. I don't care about the actual
Let me
values.
check.
Is that something you guys feel comfortable
Yeah,
sharing?
yeah,
Yeah, I'll
I'm
share.
comfortable sharing. I feel like I have a higher percentage
Maybe
than everybody
Tannor
here.
not.
I'm iffy
So-
on it.
Just
We can just do
percentage.
roughly. Like I just want to create a ballpark. Like,
SoFi is 5% of my portfolio, but to give context, Palantir is 70. So there's not that many stocks in there, but yeah.
Wow.
And again, I want to get it higher up there, but I'm a little bit concerned about this reverse split, so I'm kind of just waiting a little bit.
I don't think it's going to happen. And if it does, I don't think it's going to affect. Well,
See, even
short
if
term,
even if it does,
will.
yeah, even if it does, I feel like 2023, at least the first 2 months are not going to be pretty. So I'm like, I'm not buying anything. You know, I'm not even
Yeah.
buying Tesla. And we could talk a little bit about Tesla, but I'm not even touching Tesla right now.
I'm at 10% SoFi. Largest position is Tesla at 50.
Wow.
Wait. So Tevis, are you still up on Tesla? Did you buy it that early or?
Yeah, on one of my accounts, I'm still up on Tesla.
Wow, that means you got in good. I mean, at least you got in earlier than most people.
2019.
Wow.
Yeah.
Wow. I mean, let's do a little bit of macro. Look, we have 52 people here. It's a little bit of a late December holiday post, so we'll talk about SoFi in a bit. But
wait, I want to hear Tannor and Riley like on the SoFi.
Yeah, Tannor and Riley, and then we'll get into some macro.
So I'm very, very concentrated. I own 3 stocks. SoFi is 68%. Palantir is 30%.
Wow.
And then Open Door is rocking close to 10%.
Wait, no, it can't be 68 plus 30. It has to be 2%, right?
Oh yeah, something like it. I've added a lot of SoFi recently, so this
Gotcha.
You're loving those.
I don't like
stocks,
looking at my
right?
stocks. That's what I'm saying. What was that?
You're loving. Wasn't Palantir like also a direct listing? You're loving the like SPACs.
Yeah, my risk is I feel like I count my age into my risk. I'm fully able to lose 1x on everything I own for the opportunity to get potentially 10, 15x on these companies. So I don't really care. I'll go.
You just
all
need
in.
one of
never
them.
heard. I never heard. I'm willing to lose 1x on my position. I've never heard that before.
It's just one. It's just like I lose the money I put in. I
I get what you're saying.
Yeah.
I'm roughly around 10% in SoFi.
Okay.
But yeah.
So this week's
Honestly,
macro was discussed. Go ahead, Tanner.
No, I was just gonna say all my money's in tech stocks, but mainly blue chip companies. Yeah, no one wants to hear about that. So
do you have any Palantir or no?
I do have Palantir.
Okay.
Do we all have Palantir on this call?
Much smaller than SoFi.
Yeah.
I do want to say anybody that has the SoFi app right now can actually go to the investor page and go down to popular investors. I'm number 4, and you can just see my portfolio.
Riley,
anytime.
shut the fuck up, bro.
Seriously.
Dude, it doesn't benefit me at all. I'm just saying, like, you can always see my whole.
No, but see, that's the problem. It should
20%.
benefit you, and SoFi's got to figure that out how they can benefit.
Yeah, I don't really care. In the future, whenever they do a social platform, I'll shut up and not like shout that out. But yeah.
Okay, let's talk about the week's macro. Tesla's down almost 15% this week, ended at 122 this week. Sorry, 20.66% this week. We can do a full pod on Tesla later. I know we have plans on going deeper, but Tevis, is this a buying opportunity to you?
Hell yeah, dude. I was thinking of rolling out of some of my other positions that I'm not at a loss in, that I'm still slightly profitable in, or just break even, or even like at a 5% loss in, eating the opportunity cost. And just the equation that I'm doing in my mind right now is, in today's landscape, for the next 12 to 18 to 3 or 5 years, what is the best risk reward considering how far everything's fallen? And I think Tesla's like, well, I don't want to talk about Tesla all pod, but like I think Tesla's one of those stocks where it's relatively safe from a risk reward perspective because of their underlying fundamentals. But I don't know what China is going to come in or what but I just think that a lot of it is like also short-term noise in terms of how much it's fallen over the last month. It's fallen 70%. Like it's trading like a shitcoin. At the same time, they have like double-digit billions in cash on hand, and they're very profitable with zero debt.
The Twitter drama is not even a concern to you at all.
Who cares? And like I think
Really? Who cares?
look, Elon was on a space yesterday.
And he said nothing on that space, by the way.
No, he did. He said quite a lot on that space, actually.
No, he didn't.
Okay, I'll tell you what he said. So he said, Twitter right now has been high cognitive load because we have to worry about not going into bankruptcy. over the next month coming up, it's going to be medium cognitive load. But after that, it's going to be very low cognitive load, which is when he's going to hand it off. So, and he also said, I've not missed a single Tesla meeting this entire time. So I think that's what a lot of investors were looking for, because people falsely attribute him tweeting consistently with him always being like on Twitter and not focusing on his other businesses, which is not necessarily true.
The problem is he didn't answer how they're going to stop going bankrupt on Twitter. Like, that's the only question I care about. How are you going to get the ad revenue up in a recession where ad spend on Twitter is declining, especially because of his political nonsense that he's tweeting every day? And second of all, no one's buying this stupid blue subscription. Like, you're not going to sell millions of these subscriptions. So to me, $3 billion burn rate, $1 billion in cash. You have 6 months left. You haven't replaced yourself as CEO. The new CEO, how quick is he going to turn this around, or she going to turn this around? I don't think he answered anything. I think he just said, I'm not going to sell the stock. And honestly, I'm not believing that. I'm not saying he's lying. I'm just saying he's said he won't sell for the past 4 months, and he kept selling.
He also sold 3.6 billion, which he said that was dry powder for, when Twitter, like when that gets bad. And then the Twitter Blue should cushion some of that. And also like the minimum, like the margin requirements on the loans, should buy him also some time. So yes, it's not going to happen tomorrow, but I think that they're on the right track towards turning that around. I mean, like at this point, you're like turning around the cruise ship. Like there's been decades worth of decisions that have been put into Twitter that have contributed to it being in the state that it is.
And I think they're doing some good product innovations. My question is just how quick can they not burn the cash? Like the new views feature that you guys are seeing, that was pretty dope. Like we can see how many times tweets have been viewed. That's pretty awesome, in my opinion. It's pretty cool. Tanner, your thoughts on the macro this week and everything that's happened?
Not too much. I mean, I've been super busy this past week, so I've been kind of out of the conversation for the most part. And you can see that with me only posting one video in the past like 8 days. What I'm really excited about, let's talk about some SoFi, guys. I'm sick of talking about Twitter. I don't care about Twitter, guys. Like, it's not something you can even.
Is it because you didn't get your verification check yet? Is that what you don't?
Yes, that's exactly why, and I'm pissed.
You still haven't gotten it? It's been like a week.
It's been like 9 days.
Did you know that you lose your blue profile check if you change or edit your bio in Twitter? They take it away for like a week.
Well, I haven't done that, but
I know, but it's just like weird. I don't know why they're doing that. I guess it's like some preventative measure. But let's not talk about this. I know nobody.
Yeah, let's talk about SoFi.
Okay, so SoFi, it's a product that
screen.
allows people to have personal banking. No, I'm just kidding. Okay.
Anthony Noto bought 2.4 million this week again.
Oh yeah, I forgot he did.
That's like the only news really this week.
You want me to pull up my spreadsheet? I got them all open.
Do it.
Okay, let's do it.
So I know Stock Market Nerd had actually accounted for his like actual net worth, and SoFi is now more than like 5% of his actual net worth. Is that true?
But does he know his actual net worth? Is that public?
See? That's the thing. I don't know how he calculates it, but that's what he said.
So I mean, there's been a couple things that have happened in Noto's life that have been tracked. For example, he does have 125 million some odd dollars in Twitter shares. Whether or not he rolled over partial amounts, I think these purchases in recent times show us that he probably did some selling of Twitter shares. Where is he coming up with all this money, considering the last 6 months he hasn't put in a dime? And also he's only taking away, net of his salary about 700,000 some odd dollars from SoFi. He's not printing money, but in his lifetime, he's made, the 125 million from Twitter. Goldman Sachs paid him like $75 million one time for this merger thing. That was his cut. And so he's made money in other places. Who knows what else he has in investments? I mean, people can make money all over the place. So it's really, really hard to value. But he is starting to make some great purchases. I'm sure he's even purchased between now and December 16th, because if we look, maybe I can even show you guys the data sheet here. As he was doing his purchases back in, let me see if I can zoom it in so everyone can see it a little bit better. As he used to do his purchases, they're 3 days apart, all the way down throughout months. So whenever he's in a buying mood, he buys for long periods of time. Like he really DCAs in for that month. So whenever we look back and we can actually see that, what he was doing in December could be following that trend. He could be buying on the 18th, the 20th, who knows? Like there could be many more millions to come. And is that going to see the same love as what we're expecting? Who knows? But he's definitely increasing his total value, everything along these lines. So very, very exciting. But if you guys are ready, anything else on that? Because I wanted to talk about some other things, but let's stick on this for a sec.
So how many? So these are only the share. These are common stock purchases. That doesn't include anything else like that the company gave him, right?
Correct. Yeah.
Okay.
Yeah.
So can you do
Sorry, what's
can
up?
you do a total on the shares quickly?
Yep. Yeah. So that would be the 26
Oh.
million is his total value of his holding of
Of
SoFi.
his shares. Okay, gotcha.
That's dollar value.
Yeah, dollar.
Yes,
value.
that's dollar value. His total shares underneath. And then the chart, what we are seeing, he's actually purchased. He's added almost $11 million, which like 7 or almost 8 million of that has come in, or sorry, 7.4 million has come in just this month. So he is
It's not bad,
jumping
man.
in. That it's way bigger than people give it credit for. I mean, he's not burning his money, in a dumpster. Like this is him making bets on the macro environment. This is him making bets on, the stock and what they're doing on the back end. If and Riley's going to go into Galileo and Technisys later in this video, but if it is absolutely falling apart and we're not getting the deals that we want to, why would he be doing this and making all these purchases, even though a third of our business has gone to crap? I don't believe it. I think this is insane confidence.
A lot of the stuff that was really like unsure about SoFi was like the bank charter, a lot of this student loan scare. But now that they have Technisys, they have Galileo, they have the bank charter. I think Anthony Noto said a couple months, the only thing that's standing in SoFi's way is themselves. And like all they have to do is operate successfully. And if they can get through this macro, like they're going to be successful on the other side. And I don't know, it looks like it. And it looks like he's putting his money where his mouth is.
And plus, like he DCAs for like long periods. So it's just, I mean, we are going to be looking into, is he going to buy more before the end of the year? But he's going to still keep buying in 2023, right? Like that's pretty much a given, which coincidentally makes me wonder so much more why there was that 6-month blackout period where he didn't buy for that long. Because, he bought in June, but that was as a result of a DCA process that started in January. So he was buying, I think, every single month, maybe Tannor to keep me honest, but every single month from January on to June. And then he just stopped for like 6 months and started buying in December again.
Yeah, maybe I took it down too quick, but
he started buying like days before they released their buy now, pay later, SoFi Pay in 4. So they were all heads down working on that, trying to get that SoFi product out. And then as soon as like right before it released, Noto puts $5 million into SoFi. So I don't know. That's something interesting.
Well, I definitely don't think he's putting this money in due to a catalyst. I mean, I don't think he's going to try to put himself anywhere in the sights of the SEC to say, hey, you know what? I was doing insider buying insider trading in any regard. And he's made that clear on some interviews as well, just saying, hey guys, I had some additional capital. I was throwing into something that I believe in long-term. And that's the end of that, but that's also why I'm buying SoFi, right? I'm not doing this as some sort of event-driven trade. I'm buying this for the long term. So if we are sort of seeing eye to eye and he's running the ship, it's an exciting, thing to see. So yeah, the same sort of pattern happened every month here. June, he was buying all the way down. May here wasn't as fruitful, but then March here was also quite a lot of purchases. Now we're starting to see it happen again here in December, and hopefully, that continues forward. But do you guys want to We're not going to watch one of my YouTube videos. In
Why
this,
not?
in
Let's
this
do.
thing.
I haven't seen the newest one. We should do it on the stream.
It was an amazing video. Very low edit though. I actually
How long
switched-
was
I
it? How
got
long
out
was
of
it?
Adobe. I left Premiere Pro.
It was 5 minutes, 6 minutes.
No, this one was like 10 or something.
Oh yeah, we're not watching that.
So the edit was really crappy because I was getting used to a new software. But anyway, whenever what I spoke about here was website traffic. Now, did anyone have anything to say about the other one, or can I jump right into this? Everyone excited? Just
Go
move
for
on.
it.
Yeah, go for it.
Yeah.
Okay. With website traffic, okay, this is based on desktop traffic that we saw, and I sourced it through TipRanks. Okay. Their mobile data is absolutely shot. It's terrible. I don't know why, but you can see companies like Sofi and Affirm where just month over month, they'll see a 99% drop in their mobile traffic, which obviously is not true.
Error. Yeah.
Yeah, it's obviously not true because we still saw the exact amount of expected member growth and everything along these lines. So it's bogus. But the desktop traffic across the board from everything I could see seemed pretty legit. And so that's what I wanted to do. Now, whether or not that's a large part of the actual business, people using the desktop, I don't know what it is. 5, 10, maybe 15% of the users use desktop.
No way. It's like 2%. Everybody uses the app.
Well, I don't think it's 2%. We're seeing 2 million people per month going onto these apps. Like, I don't think it's 2%, But then again, maybe it is, right? If it is 2%, if we actually look at the website traffic of what TipRanks does show from mobile to desktop, it's actually about 30%, but I just don't believe that that's even accurate. But that being said, whenever we look at this, comparatively to our competitors, because this can only mean a survey for a certain percentage of our audience, but hopefully that survey shows us a better usage pattern for our app people. Although I feel like the app would probably be easier to log into and use. But as you can see, monthly active users for Robinhood has gone down, and so has their desktop traffic, showing a very different picture than Sofi, right? And then I also looked at a couple other names here as well. Upstart also seeing a downtrend. However, slightly, they tried to hold up, but just didn't quite make it. Ally Financial, Warren Buffett's baby, still down slightly, but almost stagnant, but still a little bit of a decline. There definitely is a standout here. Now, I tried to get Lending Club and Nubank. I thought that those would be also some great competitors to look at as well. They just didn't have that information on TipRanks. I didn't want to source it from somewhere else and mix it in with this data and kind of get, a wrong comparison. So I sent them an email. Hopefully I'll get it and I'll show you guys whenever that uploads or whenever that updates. But yeah.
So kind of interesting here. A couple of points just to jump in on, and then we can hand it off to Amit or Riley. First of all, I think we have to take this with not a grain of salt, but a spoonful of salt, because this only measures how many people landed on SoFi.com, and like I'm on SoFi.com right now, but I physically am in a location where I cannot sign up for their service. And so imagine how many people fall into that cohort, automatically, discounted in terms of watering down that correlation of one website traffic user equals, one potential user to convert, because there's so many people who just visit SoFi.com for whatever reason. The second point I want to make on that is,
but that would be the same across the board, right? There would be people just visiting Robinhood.
It's a general point around all website traffic data. The second point I want to make that's SoFi specific is, I'm curious actually to see how December would come in because of options and the buy now, pay later. Both of those were released over the last month, and both of those were highly anticipated commercial releases that people were looking for. I mean, options is something that a lot of people were, wanting to compare SoFi to Robinhood 1-to-1, but obviously SoFi lost on all those comparisons because they didn't have options, which is like table stakes for the space that they play in. And also buy now, pay later, I feel like that was a very hyped up B2C offering. So those two, I would imagine, would boost up December's numbers. Which would also help towards like that thesis of, okay, well, if we're having more website traffic, how does that play to conversions, and to try to draw some signal from all that noise in terms of a ratio of conversion, like a conversion rate from website traffic. But there's so many different pages that they can drop off. When I worked on, and currently on analytics, like the homepage is something that, especially Sofi's, like there's an incredible amount of like decision fatigue, because I'm on it right now, and there's just so many different threads that I can go down, so many different sub nav pages that I can go down, and that don't necessarily convert me. A lot of those are informational pages about their offerings or new releases or whatnot, but they're not calls to action to get me to become a user. And so I think it depends on product to product and industry to industry. Some flows have the unified purpose of just converting you as a user, and everything around their website is curated for that experience. They try to push you into that sign up funnel. Whereas something like Sofi, it's a much bigger decision. It's a more like they're focusing on LTV as opposed to conversions. And so if they're focusing on LTV, that
lifetime value,
sorry, they're going to try to educate you more and defer that conversion so long as it's a sustainable conversion. Like they're not going to try cheap tricks to get me in for 1 month and then have me bounce, because they want me in that ecosystem for the network effects. And so their website homepage would not be so curated to try to get me immediately into the conversion funnel, because that's not necessarily what their mission is. And so I just wanted to highlight that, because there's a lot of different factors, especially like where their business plays in the space and how their business like mission or offering is, that contributes to this number and the ratio or percentage of conversions that we can expect when we see website traffic.
Yeah. And I think, whatever it is, right? I am caring less about the actual number of visits versus the trend line, right? Because whatever Sofi does usually month to month, and there could be, more pages for them to click on, or maybe out of country people that go and visit it, like you and I that want to go and just to go to their investor resources. But if that trend line is up, that's still a positive signal, regardless of whatever percent is a conversion. So I'm sure that same statistic for Robinhood also exists, where there's a percentage of them where, maybe they're floating around looking for investor resources or just to read up on their, their earn and learn section or whatever. But that trend line is still going down. Like this is the problem that I find with Sofi, and there's been a lot of hubbub in the space right now, is that
Did you just say hubbub?
I did say hubbub. Yeah, I've got a young heart, but a young soul, or an old soul.
Okay, keep going.
But the scuttlebutt in the area lately is that dude, you took me off my path. Okay,
bro.
You're like a youth pastor.
The Jurgenmeister is in the area right now. Back in my day,
what was I even talking about? I don't even remember.
I think you were talking about how you get turned on by certain words, because
yeah. Oh, sorry. In the community, right? Thank you, Amit. I appreciate it.
Yes.
In the community, we're talking about how our member and product numbers are actually quite shady, in that they're cumulative member numbers, and they're not. What is the actual numbers right now? And we don't show off monthly active user numbers. And that sort of, throws people off. Okay, well, maybe only 400,000 out of these, 5 million people are actually only, returning to the platform. But whenever we actually look at the data, people are showing up more and more each month. I mean, the monthly active users must be higher, comparatively, than whenever you compare it to Robinhood or these sorts of things. That's why I think the trend line is more important than, can we get a revenue number out of this? No. Can we get conversion rates out of this? No. But whenever we're looking at monthly active users, I think it's a great sign, regardless if it's only desktop data. I mean, we try to pull the United States president from a less than 1% survey across the country, right? And they get very, very accurate, between 3 and 6% off of how close that's going to be. Now you're taking a large part of Sofi's user base that might be on desktop, and you're saying we can't take data on what the app usage is going to be? I don't believe it.
Yeah, no, it's interesting.
I feel like everyone's reading the chat. I have not been.
I 100% am. The entire, like, you were making very constructive and valid points, and everybody's just like roasting your vocabulary in the chat. I fucking love it.
You don't like scuttlebutt?
Scuttlebutt. Is that a real word, or you came up with that on the spot?
No, that's a real word.
Scuttlebutt is a real word.
Yeah, it was like talk in the 50s. What's the scuttlebutt?
I think Amit asking if scuttlebutt is a real word is this episode's equivalent of last episode, him asking, who the fuck is Jack Bogle?
I didn't say who the fuck is Jack Bogle. I know who Jack
Yeah.
Bogle is. He's an investor. I've just never seen him.
There's
before.
a private conversation where I was roasting Amit for saying ARPU, which is average revenue per user. And I was like, okay, stop saying ARPU and NIM, because these sort of terms, the average people are not going to know what these means. You have to explain things like LTV and these sorts of things. So it makes it easier for the viewer experience. And he goes, everyone knows what ARPU is. NIM, maybe you have to explain that one. I was like, Amit, what is NIM? He goes, I don't know. So he only thought that you guys knew whatever he knew. So
I thought no one knew what Fiesta meant. Okay, and
yeah, exactly. By the way, ARPU, average revenue per user, NIM, net interest margin, and I'll leave it at that.
ARPU sounds like a dude who works at 7-Eleven. I'm not gonna lie, that sounds like his person.
Cancel.
Hey, ARPU, let me get.
No, you're talking about the Simpsons right there, dude. ARPU.
Yeah.
That's where
ARPU,
you're getting
yes,
that
that's
from.
fine. Okay, let's answer this. I can say that, by the way. It's not racist because I'm Indian. Okay, Async In says, sorry to sound negative, but SoFi's tech isn't what we think it might or could be. Been working in tech for 15 years and have a couple senior engineers who left SoFi and joined my team. I'll go first on this before you guys go. I think it's easy to use subjective experiences to say this stuff. The problem is this comment just lacks so much context, right? Like, who are those engineers? Why did they leave SoFi? What team are you working at Async In? What company do you work at? Were those people, not satisfied with the stock price? They got better options at a different company. Like, there's just so much context here. So to say that people left a company, therefore the company sucks, I don't know. I just think it's too elementary of an analysis to make a conclusion about a company. Those are my thoughts.
I do somewhat agree, though. It is hard to understand what SoFi's business in tech is, just because a lot of the stuff that they're building is really secretive. And Tevis is smiling right now. But so we bought Technesis over 250 days ago, which if you look at any business that is valued over $1 billion, if there's an acquisition, it doesn't happen fast. It usually takes a couple of years, and Galileo and Technesis are pretty darn new. So I don't know what they're building. It could be really slow stuff that they're doing, but you're right. A lot of SoFi's old school employees that have been there for 3 or 4 or 5 years, primarily just been focusing on loans a lot, and they were focusing on actually expanding to the UK, and Anthony Noto came in and just shut that down. And so SoFi is kind of a clustered company with a mission and a business model that, if executed properly, could be really, really cool. But that is I do somewhat agree with that comment. It is hard to understand where we are right now, and that's one of the fun things I like about SoFi is trying to figure that out.
Yeah,
and I mean, you're gonna have that too. As someone who works in the tech space, I've worked on infrastructure projects, and they're always a shit show, every single time. And so I can just imagine for SoFi buying Galileo and Technesis and just trying to do the back end integrations for many of these platforms. It just you're trying to mix legacy platforms, or you're trying to build on top. And if the foundation is really strong, then it's possible. But a lot of the times you're trying to, if you're trying to integrate, you have to deal with a lot of the legacy code that you have to refactor and just fix the infrastructure first before you can start building on top of that. And look, I think the other point is that SoFi is not a small company. It might look like that because we're comparing it with the likes of, Apple and Microsoft, in the stock market in that arena, but they have over 4,000 employees. There is definitely bloat in all these kinds of companies, especially ones that are dealing in the tech sector, because it's sometimes a black box to try to find optimizations there. And it really depends on how good their processes are for drawing that out. But over 4,000 companies, there's definitely going to be significant amounts of bloat or not productive periods throughout that time. And I mean, you could have one team in SoFi that's really great, like their engine, core integrations team, and then you can have their front end team, which is absolute garbage, or so on and so forth. But all those teams eventually have to work together for the end product. And so as consumers looking from the outside in, we can only see so much of what's happening, on the inside from a tech platform perspective. So, but I think that the overarching point, not to sound too negative on the tech side, the overarching point is like they have a pretty unified vision of where they want to go. And a lot of these problems of like, how do we get there? I feel like those are logistical problems more so than anything else.
Tevis, based on your knowledge, what do you think so like Technisys and Galileo and SoFi, there has like management in this whole company has to be like really scrambled. Just because everything's so new, they're trying to build something together. You're in that area in tech, like where you understand that like you might have like the best programmers in the world, but like if the people above them are making wrong calls, or if it's scrambled, or if the communication is not right, it could really like have an adverse effect. Do you think like by 2025 we're going to have Galileo, Technisys, SoFi working and operating on a good scale, or not scale, but like efficiently?
The incremental difficulty that I will say to that, Riley, is that normally if you have two companies that are integrating, that's one thing. But SoFi is taking it to one level beyond, where that integration is a product that they're offering white label to other companies. And so the process has to be so spick and span there. The documentation has to be super clear and accurate. Like it has to, like they're selling that process and that integration. So the actual infrastructure to support that has to be rock solid, because it can't crash, it can't overload, it can't go down, because they're selling this as a B2B offering. And so it's going to take a little bit more time, I think, especially if they're running on some legacy stack, if one of these companies is. And then obviously there's going to be some bureaucratic, what is the direction? But I think a lot of that is cleared up when these companies are bought out. There's conversations that SoFi, that Noto must have had with Technisys or with Galileo that said, hey, look, this is where we want to go. This is how we feel the integration is working. This is, I saw in that Chris Lapointe interview, I just made a video about it today, but basically you posted about it earlier this week, which, made me rewatch it, the Mizuho interview. And one of the things he was talking about with regards to the Technisys and Galileo acquisition was, it has to be a mutually beneficial partnership between both pairs. And so that is something that is aligned on at the topmost level, and then trickle down towards, the how. They have to talk about the what and the why, and then they talk about the how do we get there, right? And so I think a lot of those questions are answered prior to any hands going on keyboards, right? Prior to any coding actually happening or any designing happening. And to that point, I'll just say, like, probably what happens is like Galileo's team or Technisys' team has maybe 5 core features that they want to release for the whole year, like 5 major like epics that they want to release for the whole year. And that is all, top down driven from these conversations. And so it's mostly a conversation of how, but the point, again, to reiterate, the incremental difficulty is the fact that they're selling this to another company, which means that they have to have their house completely in order.
Let me ask you a question, because I think that was a really good analysis about the sort of case around the infrastructure for the back end on the B2B play with Galileo and Technisys. Do we think SoFi would have the valuation that it has today at, I think, 5-6 billion market cap if they didn't have Galileo and Technisys? Like, if they didn't get those guys and they were just,
I don't think our valuation is even reasonable as it is. I don't even know if any investor is actually counting that, because I don't think they even know what it is. What were you saying?
But if we didn't acquire those companies, because again, that's why I invested. Remember, I didn't invest for this personal banking stuff. I invested because of Galileo. And so, like, if that's not part of the conversation, I mean, I know a lot of people didn't invest for that reason, but do you think the street would give it even less love than they're giving them right now?
Yeah, I think so. I mean, like, there's no way SoFi would be able to scale as fast, because Yeah, go ahead.
But let's let Tanner get
Yeah.
in. He doesn't talk about it.
Yeah, go ahead, Tanner.
No, I was just going to say, like, what is Galileo and Technisys in just in terms of revenue, let alone how profitable they are? What percentage of our company is, Galileo and Technisys at this current point? I think it's like 19% of our entire business. So I think it is important to look at, but the majority of analysts are looking at our banking side because that's the make it or break it, right? The 80-20 rule all the way. So that's really what's going to make up for all of our business, really. At this current time, obviously, hopefully that's going to get more diverse. Chris hopes it doesn't.
I do want to say one thing. This is why I think the SoFi app in 2023 is going to crash often, because SoFi is like the perfect place for Galileo and Technisys to do R&D. Because SoFi wants everything to be as futuristic as possible and like make it as cheap and as efficient and as like the coolest as they want to build the best product that they can on this thing. So they're going to let Galileo and Technisys build something really cool. And then also when they finally build it for SoFi and they actually perfected it under their own like unique house that they have there with all their SoFi members, then they're going to be able to package it up and sell it to other people. So,
well, there's a lot of products that Galileo offers that SoFi doesn't have, right? Like, if you actually go through, there's many products that we already offer through Galileo, which I'm like, it's so weird because I see a lot in Twitter and stuff. A lot of customers are actually asking for these features. Like, I think joint accounts is one of them. This is absolutely,
SoFi has joint accounts.
Okay, let me go ahead and I'll go ahead and bring up the thing. That way I'm not misleading anyone, but I'll let you know the list that I was just throwing together.
Maybe while Tanner does that, I can sort of just give my answer to Amit's question. I think, if you ask what portion of Galileo or what portion of SoFi's market cap is Galileo and Technisys and zoom out, really what you're asking is what is it worth today if we detach those companies? And more subjectively, because today you can calculate it, but more subjectively, what is that vision worth? Because Galileo and Technisys is really the key to unlocking that AWS of fintech, which is a huge part of their value proposition over the next 10 years. And so if you don't have that, then what does SoFi look like if it's not the AWS of fintech? It's maybe a one-stop shop where you can have one place to do all of your financial services, from lending to taking out a loan to crypto and whatnot. But that B2B offering is a huge part of the product that they're selling or how they're marketing themselves, how they're branding themselves to the market. And if you remove that, it might have a marginally smaller hit on their market cap today. So let's say out of 5 billion, it's maybe 1 billion today. But as that number over 10 years goes up, it'll be such a much bigger percentage because it is a synergistic value offering for their total suite.
Some of the products that Galileo can offer as of today is like things like secondary accounts, business accounts, these sorts of things. I think it is secondary accounts that SoFi doesn't offer, right? You can't split your money up into different sort of like, this is my tax account, and these are, my sort of other things that maybe certain places will let you do that allows you to customize your own savings accounts the way that you want them to. But Galileo customers can do that. SoFi doesn't offer that directly. And I don't know why they don't have that. So
I think it's all about focusing on building out their next generation core, and then they're going to start building on top of that. That's what they've been saying for the past year, is that they're trying to get a modernized core. By the way, I've actually I've actually searched quite a bit for some next generation core banks, and there's not a lot in America, which is very, very odd to me. There's not a lot of banks out there that actually run on what SoFi is trying to build. And what
do you mean by run on what SoFi is trying to build?
Not a lot of banks are. Okay, so this goes to the banking 4.0 that we can bring up, I guess. I'll explain it real quickly. So there's this guy called Brett King, and he is kind of like a futurist for banking. He's written a few books, and a lot of banking CEOs invite him in to banks for speeches and whatnot. But anyway, he created this model called Banking 4.0, and it talks about like the era and progressions of banking as we see it in the past 2,000 years. So, for instance, banking from the Romans all the way to the 1960s very rarely changed. It's kind of like the same model. You put stuff in a vault. And then in the 60s, we first had like the first account numbers. But nothing really changed about banking until we got the internet and you could actually get on your computer, click, and look at your balance. That's banking 1.0. Banking 2.0 came about when smartphones came about. So like 2008 era, where you can get on your phone, you can do deposit checks via your phone and like check your balances and send money back and forth. Banking 3.0 is where no banks in the US are at right now. I mean, like there are a few. People are getting close to that, but you can't meaningfully make a bank that has artificial intelligence, machine learning, big data, that can assist you with stuff like on like Facebook is really good at selling you what you want because it knows who you are. Banks don't know how to do that. SoFi's like that's the whole SoFi's productivity loop thing that they're trying to do. But SoFi is trying to build like a platform under 3.0 banking where you can use like machine learning, where you can use advanced technologies that developers in fintech can build. So here's the thing, like why can't banks jump to 3.0? It's because the back end of banks in the US are so badly and poorly built, and they're very, very old, and it's very, very expensive to move off of them. And all the leadership in banks in America right now don't really have any push to, because if you're a bank in the top 10 banks in America, they have a feeling that they're going to still be in that top 10 ranking in the next 10 years because like there's not a lot of competition in banking. But that's going to change pretty soon whenever 3.0 banks start like taking market share, because whenever you introduce AI and machine learning and all these other oh my gosh, I can't talk, all these other advanced technologies in banking, your bank is going to have such an operational low cost to running that you're going to have so much more like dividends and profits than other banks. And in the future, other banks are going to start feeling the heat. Go ahead.
Let me come in real quick. Chris says, I don't agree, Riley. JPM has that. And you can respond, Riley, to what Chris is saying. I think if a bank has overdraft fees, they are not banking 3.0. Let's say
yes. That. So Chris is right. Chris is 100% right. JP Morgan has a lot of these advanced technologies. And the reason why is because they have a deep, endless pocket where they don't have to do any of this stuff. However, if you look at all of the other fintechs, okay, so like let's take all of the innovation in banking right now. Where is it coming from? It's fintechs, small companies, not big banks. And the reason why is because they have big ideas and they're not scared of regulations, where they ask like regulators different questions. So like if you're at JP Morgan and you go to a regulator, you say, what can we do? And then the regulators tell them what they can do. However, if you're a fintech, you go to a regulator and say, can I do this? This is like the whole culture with banking in America right now. So what the point is, like SoFi is going to be building this 3.0 platform, and they're going to attract all of these awesome fintech developers in the future. This is not like, I don't know the future, of course, but like JP Morgan, yeah, they can have the deepest pockets in the world, but if you get everybody in fintech that wants to make a fintech business using your platform, it doesn't matter how much JP Morgan has. Like they're not going to be able to outcompete the entire market. The entire market's innovation. There's a reason like JP Morgan didn't make Affirm or any of these other like buy now pay later products. It's because they had no competition and no drive to, you know. So go ahead.
I can just set the stage because I think I'll let Tannor just jump in with his point, but and just maybe this might be like super simplistic and very common sense to a lot of people, but for some people it might help frame the situation. So banking 3.0, all about personalization. Like how do we become personalized in terms of leveraging your data to give you better service? And in order to do that, there's really two things you need. You need a huge pool of data that you've collected. So you need a lot to know a lot about me so that you can cater your service to me. And then number two, you need the actual tech platform that is basically the model that you train, that you feed that data into, and then that becomes the engine by which you serve that personalization. And so a lot of these legacy banks have gigantic pools of data because, you know, people have been using them by and large for their entire life. And, you know, the banks can form models around that. What they don't have, and what SoFi is building, where they're inserting themselves into this equation, is that engine by which to digest that data and thereby provide personalization to end users.
And that's very important because fintechs that are being the most innovative, they need to partner with banks. So there's a lot of banks in America right now. I can name a few in a moment, but like there's like Robinhood has a partner bank, and that is Bancorp, and SoFi uses it, Chime uses it, Venmo uses it. There's other Lincoln Savings Banks, Moneyline uses it, M1 Finance uses it.
There's a ton of bank sponsors out there.
Yeah. So these banks, they're like stuck in 2.5. They're not at 3.0 because a lot of these, like the Cross River Bank that Affirm and Upstart uses, like they're stuck at 2.5. They're not at 3.0 yet because they don't have like this amazing back end. And I want to be clear to everybody who's watching. We don't know if SoFi is going to be this 3.0 bank yet. We don't have to, like Anthony Noda hasn't proven it to us. So SoFi is technically unproven, but this is the model that they're chasing, is where they're going to be like this awesome platform. So like if you're building an AWS of fintech, you want old institutions to run on it, of course, because they have all the money. But you also want to attract all the people that build stuff because you can't do it yourself. There's no way SoFi is going to be able to build a better bank than JP Morgan with the deepest pockets in the world. I mean, and all these other banks are going to want to shift over to SoFi, this $5 billion company. It's not going to happen. You want to marry both sides of the river, where you get all these fintech developers wanting to build on your platform because it's cheap and easy, like AWS was in the early 2000s, and how it like made it easy to start a business, a tech business online, and you want it to be on SoFi's platform because then SoFi has all the innovation, and all the banks want exposure to that innovation, so they come to SoFi. So
maybe I can just jump in, which is actually
Yeah,
Tanner. did you
let
have a
Tanner.
point
Let
before
Tanner.
I jump in. Okay, so he's fixing his audio, I think. So I'll just jump in. So we've established.
Are you good?
Why
Tanner,
this
good?
is? Yeah, Tanner, you want to go?
Yeah, sorry about that. I had my my laptop here plugged in, but I don't know, it's still draining battery. So, I was just going to say as well that one, JP Morgan is, or in a lot of these big banks, it's the cost at which they're making these new technologies as well. It's the speed in which they can innovate that's also important, right? SoFi is being able to innovate very, very quickly because they, vertically integrated with this, acquisition of Technisys. Whereas JP Morgan, do you know how many technicians they have trying to work on better technology there? 50,000 different technicians at JP Morgan alone. 50,000. And the speed, the slow speed to innovate on their crappy product that, unless you're in an extremely high net worth, sort of individual, it is a crap product. And the only reason why it's not crap for the ultra high net worth people is because there's no one that's built a platform for them yet. And so JP Morgan remains the kingmaker and tax collector of that area. But, until SoFi can build out a platform for that as well. And I'm not saying necessarily they're going to dominate every area, but the new fintechs are undisputedly taking a massive market share from the larger banks, and there's nothing that they can seemingly do about it. And I'd like to bring up a chart after Tevis says, just to prove my point here.
Yeah. So what I was going to sort of move us into is, like, we've established that this is, an important next step in the banking technology tree, let's say. And we've established what are the steps necessary for us to get there. And the next logical question that comes into my mind is like, okay, why have the legacy banks not done it? Has it been A, because they don't see enough profit in it? Like, it doesn't make sense for them financially? Has it been because B, they have not had, enough competitors, so they never felt the need to innovate? What I'm trying to get to is, or has it been because C, they just don't have the know-how, the actual technology at their disposal to do it. Probably, something in between is the truth. But the thing that I'm trying to get at is like, is this a proactive move that SoFi is, or fintechs like SoFi is going to lead, or is this a reactive move from the banks where they're saying, oh, wait a minute, now there's competition? Or are they saying, wait a minute, now we've realized that there is dollars and cents to be made here. There's optimizations in terms of our profit. Therefore, we're going to make that move. So just I guess the overall sentiment as to why big banks should care about this, and like, is it really something that's that much of a paradigm shift that will disrupt the likes of JP Morgan and Goldman
Tevis,
Sachs?
let me ask you a question, because how do you think that JP Morgan will make tech faster than all these fintechs that start up? There are so many fintechs that have started up in the last 5 years. And if they have a platform to build on, like you can see these fintechs scale rapidly and take market share rapidly. And SoFi doesn't really want to compete with them. They're trying to do like win-win scenarios like AWS did. And I just don't see like there's a lot of like debate that SoFi, why would you buy SoFi if JP Morgan has this much money? They'll never compete. And SoFi is like, we understand that. We don't care. We're building a platform so other people can build on top of it, just like AWS did. And this is, SoFi has so much like strategies that touch on other companies. Like their SoFi app is like Apple, where it's all in one ecosystem. They want you to like stay in the same ecosystem. They build their products to work together. And then they're like they're trying to be like AWS on their tech side. And then they're like, I don't know. I had another comparison, but whatever.
So I agree with you, Riley, in terms of like, okay, if we look at the likes of JP Morgan and the likes of SoFi or whatever, Affirm or Robinhood or Square, whatever, insert fintech here for whatever problem you're trying to solve. The legacy players are not going to be able to compete in terms of the speed of innovation on a one-to-one basis. But what they do have is they have deep pockets and unlimited resources. And something that's happened here in Canada is like every single disruptor that's come into the market has been bought up by a legacy player, and it's still status quo because the disruptor comes into the market and starts disrupting. And the moment the legacy player feels invaded or encroached upon, they'll just buy up that company and all innovation stops dead in its tracks, and it's just status quo.
Yeah, but I mean, I think, it's very, very hard to sort of put the genie back in the bottle sort of thing, like these fintechs are starting to break out. I don't think I think this industry is evolving now. Anthony Noto knows it 100%. And just really quickly, if I can show you a couple things. I don't know if anyone's been following the Federal Reserve posts assets under management for different banks. And now I wanted to cover so many points, but I didn't want to jump in and disrupt anyone. So really quickly, while I'm bringing this up, I also wanted to say, why buy SoFi over JP Morgan? Well, I mean, the honest truth is that whenever you're buying a stock, you're not buying it based on what company's the biggest. You're buying it on the rate of change versus the expected rate of change, right? There's an expected value at which it's going to grow versus how much you think it's going to grow. And then that's going to determine whether you're successful or not. But so what's the likelihood that JP Morgan at a 1.5 times price to book ratio is going to make up 50% more of their book just to get flat versus SoFi at a 0.8 price to book ratio? How quickly are they to actually double that book, which is extremely small right now? That is the funny thing about SoFi, and why I think we're in such a great area right now is because our expected growth is bottomed out when really no signs are really pointing at that at all. It's just a bunch of people with feared, things because other competitors have gone down. Common Bond, Robinhood, a lot of these companies have faced, bad sides on their actual company performance in the last couple of quarters. And so people think it's going to happen to SoFi, but it just hasn't. Really quick, I also wanted to show, can I share my screen?
Yeah, you got it.
Here is this Stephen Fiorillo. We've had him on the show a couple times. Posted this. I added just a couple different things just to see the actual market caps of these companies and the rates of change. And so what you can see here is these are the deposits between Q1 to Q3. Now, it is a spiked chart, okay? Absolutely, because this is SoFi's first, quarter of deposits to their now, where they are now in the last 2 quarters, okay? That's not exactly, what I'm showing off, but even the actual new amount of deposits, whenever you just look at the overall number, is way higher than most, considering that most of these bigger banks are actually in negatives. The fintechs are coming in and swiping away customers from all of these larger big banks, okay? And they're going to the smaller names right now. And people think that we're going to go bankrupt in this terrible market before we're able to take off. And I just don't think that's going to be the case. But that's the risk versus reward in this scenario.
SoFi has a $3 billion market cap right now.
I just
yeah,
about to ask the same
3.7.
thing. That's
Wow,
insane.
bro.
That's insane.
The price to book on SoFi must be ridiculous.
So wild.
Oh,
Yeah, I think it's
my.
0.8. I think it's 0.8. So people are saying that our book value is going to go down before it even goes up, and that although we're growing at 60% rates on our revenues right now, we're absolutely going to profitability. That whole argument is an absolute joke. Look at Lending Club, look at SoFi. Tell me the difference. They're just earlier in getting their bank license. But if you can actually find the difference, I'd love to know. But these are sort of the great things about SoFi. They will hit profitability. They'll hit 4 quarters of profitability. And that will be, I think a big catalyst. That was a huge catalyst for Tesla, right? It was a huge issue in 2019. Tevis, if you were there, you probably remember it was
2020.
Even whenever they first started getting quarters, 1 or 2 quarters of profitability, it was nothing. We want to see a full year of profitability. They did it, and the stock absolutely skyrocketed. I'm not saying that's going to happen with SoFi, but if the trends continue, I said this on Riley's, spaces the other day. If you were to value this company by not looking at the stock price and simply looking at the financials that they're showing you each quarter, I would say most people are valuing it much higher than a $3.7 billion market cap. That's a joke.
That is now I know why Noto's been loading up his piggy bank with SoFi.
Yeah.
I mean, goodness. Wow.
I mean, you can take your opinions from comment sections and these sorts of things. I would prefer to take it from the people who are betting their money and being in the driver's seat. That is such an important catalyst. I can't even believe it. Very, very important.
Yo, no Palantir Weekly this week, Amit?
No Palantir Weekly this week. Nope. No Palantir Weekly.
So can I continue? I've got
I've
got stuff.
I love the charts. I love the charts.
And I do want to add something to what you brought up on that first chart, Tannor. Just like imagine
deposits?
because like we're seeing like a shift of like capital moving from these big banks to like SoFi and other fintechs, like you said. But just imagine if like these fintechs actually had like really.
Can I pause you really quick? Chris said this will be SoFi's first recession, as if we didn't get our biggest product, student loans, ripped out from under us. What are you talking about? We absolutely have batted 1,000 through tougher times than we're going through today. You know what I mean? We were in a way more rough spot than whenever we didn't have a bank charter and we did not have way more diversity in our tech platform and our financial services.
We didn't even have Noto at that time, too.
What?
Yeah, that's a nothing burger, Chris. Come on, Chris.
Absolutely.
You've had better bear comments than that. Come on, my guy. What do you mean economic recession? Is there a different definition to recession than economic recession?
Yeah.
They're both
We're gonna start a tricky game. Take a shot every time Chris triggers someone.
It's not even a trigger because he didn't say anything in that one. I expected a better comment than that. Come on, Chris.
It reminds me of like the White House press secretary, where it's like, this is not actually a recession. We value it differently now. All right.
Yeah, I mean, look. If SoFi actually goes bankrupt, which is kind of Chris's,
which in America, only 6 banks in America actually go bankrupt a year, which is like 0.4% of banks.
Yeah,
it's just crazy.
And that's the logical explanation of Chris's assumptions here. That means Noto is willingly buying millions of shares. Think like if it were to go bankrupt and Noto's buying all these shares right now, that means you are undercutting every potential scenario for not only which this company survives, but they get through a macroeconomic crisis and then begin to thrive. And that to me, it doesn't make a lot of sense.
If you're buying Meta right now, you're pricing in the idea that they're going to go bankrupt. You know what I mean? Like every company has a risk reward. The risk is that they are going to go down, right? So, I mean, in every scenario, that's the case. SoFi is nothing different. Especially
also let me.
He had to hit him with the Meta. why do you cut so deep, Tannor?
That's true. I mean, he makes a good point. Also, this comment by Noah James, Amit blocks us but won't block Chris Patel. I don't even know who you are, bro. Like, I don't block anyone in the chat. I don't do that unless they're a Tinder bot. So I don't know who I don't block Chris because we like Chris's. Yeah, we like Chris's arguments sometimes. It's just sometimes they're also shitty, and we get the dunk on them. So that's why we don't block Chris.
Yeah. Oh, dude.
The last link that Noah sent in the chat was some live sex thing. I don't know. So
that's why we blocked him. Right. Okay. Yes. Okay.
No, I'm just joking.
You're making that up.
Okay, let me go ahead and share my screen here.
Yeah, Meta getting fucked.
A kind of a sketchy source, so I apologize to the Bears. So this is the Federal Reserve. I don't know if we've ever heard of them. So they put out a large bank statistic showing off the assets under management that different banks have if they have over $300 million or more. Okay. So just going back to whenever SoFi first became a bank of March 2022, right? And anyone want to take a guess on what number we lie on the first quarter for SoFi? I mean, this could be so many, right? So I'll just jump to this one. So 449. That's where we place because we have 2 billion, assets under management at SoFi. Okay. Then in Q2, the next quarter, where do you think we've gone? Do you think we've gone up or down on this list from the Federal Reserve? That's my question.
So wait, this is SoFi asset. What are we?
Yeah, these are SoFi's assets under management that they have
for all banks.
For all banks across America.
Wow.
We definitely went up.
Yeah, we went up way higher.
I don't know.
Sorry. Shouldn't have seen that. My bad. I mean, not shouldn't have seen that, but that's just my notes. And then this is for Q2. We went from 449 to 240 in a single quarter, guys. In a single quarter, we leapfrogged, twice as high up the list, right? And this is like at the top of this list are the JP Morgans of the world, right? So then jumping back, going to our next quarter, this is the one that just published recently.
Definitely like in the top 100 now. We must be. I don't know.
We are now at 184. So once you start getting into the high ones, I mean, the numbers start getting insane. You start dealing with really, really big banks.
Is that current quarter, Tannor?
This is
Q3.
This is the current published quarter. So Q3. Okay. The next one will be Q4, but obviously that's going to come into the new year. So very, very exciting though in the fact that we continue to grow. We are not a small student loan business that a lot of people like to say. We are climbing the ranks. So in these first recessions that SoFi is going to see, who are going to be those 6 banks that go bankrupt during this time? Is it going to be SoFi that is doubling, going from 449 all the way up? Or is it going to be in the deposit ratios of these tiny banks that have a couple $2 billion and they're losing deposits, quarter over quarter, right? We are not nearly in a position that so many other banks are, and yet banks in general are in such a well-capitalized position to not go bankrupt at all during these recessions. I mean, obviously there will be way more bankruptcies during an actual recession if things really get bad. But I mean, there's been articles year after year. 2008 isn't over. 2009, an article, the bear market's still here, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. You know what I mean? To continue to have a bear thesis, it sounds so easy to project a theory versus what actually happens is most of the time, the stock market does come out on top. And so is it more risky to bet on a single company? Absolutely. Is it more risky or is it less risky to bet on a capitalized or fully capitalized chartered bank regulated by the Federal Reserve, the OCC, and the SEC? I would say the risk starts to go down dramatically.
I would tend to agree. That was great analysis. That was great analysis there.
Good chart.
Yeah, no, it was a really, really good chart. Someone said, "Can we get this for Robinhood stock?" So we don't have a Robinhood weekly.
Would they even be on this list?
They wouldn't. They wouldn't.
It would be it would be Bancorp. That's our partner bank, but like literally,
Bancorp
that's
has like everybody.
Yeah, for real.
Right.
That Bancorp has us. Like we're a partner of them.
Actually, Tannor, since it came up, where is Lending Club on this list?
Sure. Yeah.
Higher,
Let me
lower?
see. Do we know the name of their? Oh, I got it. I got it very quickly.
While Tanner is bringing that, oh, go ahead, Tanner. You got it.
Very funny where they lie. They're very close to us, hilariously. Let me throw this back up, and just so you can see, here's SoFi at 184. There's Lending Club actually just at 191. It was on our screen.
We're beating him.
So,
wow.
yeah, quite interesting.
And they got their bank charter like way before us, didn't they?
Yeah, absolutely. Well, I don't know about way before us. I think it was like 3 quarters or something like this. But still, those make massive differences because now they're in massive net incomes. Now, they also don't have maybe the R&D that we do, to try to run a technology business. But then they're also not going to, gain that reward or that diversification whenever that comes. So if we're going to talk about who's at risk, and I mean, Lending Club is also, getting attacked very hard in the stock market too, because those same risks apply to them. If not, I would even say higher for them because they don't have that diversification. However, they do have that profitability, which is very good. But honestly, we've got a lot of cash. Like it's not too big of a problem for us either. And people don't seem to enjoy those safety nets as much as I'd like to value them.
Chris says, any comments on delinquencies during this recession?
I don't know.
Haven't we already beat that horse?
I think we have. Yeah,
I think SoFi is way more prepared than a lot of banks when it comes to delinquencies. They should have enough data to really focus on who is valuable. They have enough. They've done lending for a decade now. I feel like I don't know. I'm going to just automatically defer to Noto's purchasing power and say, well, if he thinks 2023 is going to be good, like I don't think he has anything to worry about.
Well, so I would say so far, since our delinquencies have started to climb in the past year and a half, we've gone up by 0.6% in total delinquencies. All right, which is, it's not something we want to see, but also the amount of interest rates that we've gone up during that time is like 1.8% on a per loan basis. So we're actually more profitable on our loans than we were, back in the day. So yeah, our delinquencies are climbing, but our profitability is climbing faster than our delinquencies. So I would say we're better positioned now in a way. And I don't know if anyone's seen my video. I mean, if you're a SoFi Weekly viewer, I guess you have, because we played the whole thing last week. But why does the argument of Capital One ratios not ever get played into the picture, right? Like, why do these secure nets of, hey, you know what? Since the 2008 crisis, which is what everyone's worried about right now, where the regulation was 2%, it's now 7%. Okay, that difference is massive, and they go, okay, well, we want this to protect, the banks, which ultimately protects the customers. But SoFi says, you know what? 7% is a great number, but just to make sure that everyone's happy because we're a new bank, let's make it 16.4%. Okay. Is that not a safety net enough to guard against delinquencies? Right. And then even if SoFi does catch more losses than we're expecting, the stock is already pricing that in. We're lower than book value. So this is what I mean. It's like, okay, so what are we saying? Are you saying that the stock is going to be worth less than it is in the future? Or are you saying it's going to be worth less than what the stock market is already predicting? Because if it's the former of that, then there's a margin there of which you can trade on because, well, we're not going to lose as much as what the market is saying. And I personally don't think that we're going to be hit nearly as hard as what people are saying, even if the doom and gloom harsh scenario is coming.
So you
completely blow over.
If that doom and gloom happens, SoFi's a $3 to $4 billion market cap. Like, do we think they can get to 1 billion of a market cap?
Do you think it can hit $1?
Extremely
terrifying.
Yeah, honestly, I never thought we were going to get to the price that we are today. Extremely irrational things can happen in the markets. And you know what? I have to look at it as a way of, if this company is going to get bought out or something like this, whenever it goes to $1 billion, because it's not like the assets are just going to be left, just on the wayside, right? So obviously the company, if it was to get acquired and go down to $1 a share, I would still want to buy those shares, because at the end of the day, the balance sheet is healthy and that people could actually, buy the company for more than what maybe it's offered at. So I'm not worried. I have a very long-term horizon. I don't need the money right now. I'm happy. So I'm going to be buying for the long term. And if we do survive, I'm going to be a very rich man.
Yeah, I agree. All right. I think that's it, unless we got anything else we want to talk about. This is a good episode. I'm into a lot of different stuff, which is why Noto is buying so much. Yeah. I mean, I think Noto looks at his market cap and he thinks it's ridiculous, given everything that they're factoring in.
Well, we got to look forward to new products. We got to in 2023, if we're looking forward, this we could save this for next episode since it's still going to be in 2022.
So, are we doing a December 30th episode or not?
Yeah, December 30th. What?
I think I could do it. I'm going to be in Mexico though.
Even better.
Even better.
You'll have a fiesta.
I'm definitely down to do it next week. It's I honestly, I'll always find an hour somewhere, on a Friday. It doesn't matter.
It could be
love. That's love.
We know Amit's not doing anything, so he's automatically in.
Amit, by the way, I feel like every comment I send you on Twitter is taking a, devil's advocate side of the story, kind of going, I hope I love you guys. I'm gonna trash all you on Twitter. You guys all suck, but I love you.
Yeah, can we? Let me pull up
get that check mark first, and then you can trash.
What did you say?
Yeah. Hey, Tevis, you apply first, okay? You tell me how hard it is, because you're gonna get it in 2 days. But
I replied to Riley on one of the posts. I was like, I'm not getting it until this. We can upload videos straight to Twitter. By the way, Merry Christmas, B-dubs, and everybody else who's watching. Love you guys.
Yes,
and Merry Christmas to you here. 3 as well, you knobheads.
Chris said if Noto was on, he would shut up and listen. But I wonder, Chris, do you think that my points are mute and that those aren't valid points? And what would you? Maybe that's a discussion for our own time. But I invited you onto my channel. And that offer still is open. So
Chris will definitely come on your channel.
He absolutely will not, because he declined. I don't.
Wait, he declined.
You send messages to everyone. I invite Chris Hager on, and then he's on Riley's channel the fucking week after, and then I invite Chris on. Then he's on This Weekly. No one wants to talk to me.
Wait, when you asked Chris, did he actually say no? I don't want to come on your channel.
Chris Hager.
Oh, I thought you were talking about Chris Mateo. Yeah,
both said I'll let you know at a later date. And then
Chris Hager is a busy guy. Chris,
there's something about you that people don't like coming on your channel, bro. Because Chris goes on everyone's channel, bro.
I swear,
everybody's.
Hey, Tanner, maybe if you refrain from saying things like scuttlebutt, you'll have more friends.
Yeah,
Chris,
what's the craziest thing?
Life advice.
The worst part about this is I'm a salesman by trade. I can't even get people onto my channel. The way I feed myself is sales.
You sell like insurance.
Chris is in the chat, by the way, and to be true, like I invited Chris on before he even asked. So
well, I don't know.
Wow.
Riley,
I'm not that butthurt. I'm going for the comedy point here, but yeah.
Riley had a great episode with like other Chris, not Bear Chris.
Oh yeah.
That was a really good.
That was a great interview. It's a great interview.
Yeah, I appreciate.
Now let's look at what Tanner said to me on Twitter. Okay, I tweeted this picture saying the microphone needs words to have a purpose.
What is your background though?
That was. What do you mean? What is my background? That's just a fucking. It's just a fucking picture. And then Tanner comments, "Bro, we need to talk about the setup. Make up your bed."
There you go.
That's
exactly what I'm saying.
Like, just demolishes me on Twitter, bro. And I'm like,
dude,
all right,
you're flipping the whole perception I have about Canadians.
Yeah, man.
What? That we don't make our bed? What are you talking about?
No, that you're not funny.
What's this perception?
Means that we're nice. That we're nice.
I thought you guys were nice.
No, but I was really roasting him because he's plugging it into the wrong preamp, and so the gain. I don't want to get all nerdy, but the gain for that that mic won't even the preamp won't even offer that level of gain. So the reason why he's blowing out everything and his volume, or sorry, the quality of his voice is just not at the level of a Shure S. He spends $400 on that microphone, and it sounds like this Blue Yeti here. So
You know the problem, bro? Ticker
Yeah,
symbol.
what do you got
U
against Blue Yetis? I got one of those right here.
Those are trash.
it's a
bro.
piece
Those
of
are trash.
shit.
Really?
No, bro. Ticker symbol U, who I think everyone knows on YouTube.
Yeah, Alex.
Alex, he sent me the Amazon link for this interface. So he uses it and it works. So I'm like, I don't know why I can't use it and it doesn't work. So
Well, because what Chris put in the chat, you need a cloud lifter if you're going to have that shitty preamp.
Alex doesn't have a
So-
cloud filter. He said this is all he got. He
Well,
told it to me in
I
July
don't
when I
know.
bought this. So it is what it is.
What I usually go for, if anyone even cares, no one cares, but you got to get a preamp that allows you to at least go up to 60 gain or negative 60 decibel gain. So that's really, really important. And anyway, it's super nerdy.
Okay, before we leave, let's do one thing we are all grateful for. And no Palantir Weekly this week, Aurelio, no Palantir Weekly. Riley, what are you grateful for before we leave?
This freaking podcast, dude. I'm telling you, I'm losing friends left and right talking about SoFi. They make fun of me all the time. I was playing pool earlier today, and they're like, "Hey, don't let Riley tell you what to invest in. You're gonna lose all your money." I'm like, "You motherfuckers!" Oh my god. Just
Well, they're
wait.
right
Well,
about
I mean,
Open Door.
we
now.
heard your
They're right about Open
portfolio.
Door.
That's true. That's true. 100% true.
Palantir SoFi Open Door. I mean, are they wrong?
But honestly,
That's
even
right.
if you bought Meta, Google, Amazon, it's the same shit, right?
Yeah,
Like, everyone's
2022 has been rough, guys.
yeah.
Do we think that's going to continue though in 2023? Because I feel like we're going to get like a turnaround somewhere halfway throughout the year or even around spring.
No way it can be as bad, right? As
That's what I'm
2022.
saying. Like, I don't know.
Yeah. Okay, what are you thankful for, Tevis?
Honestly, like the fact that we have this podcast is really fun.
This is getting really depressing.
Yeah.
Okay.
Yeah.
Tanner, what are you
gonna say
thankful
this-
for?
I'm thankful for my girlfriend and thankful for.
She's like in the background with like her hands crossed and shit.
I don't have to
Better.
go to bed with you guys later tonight. I need to. If I want to wake up, I'm going to say the right answer. So these walls are thin. I mean, no.
How long have you been dating her? Like 4 years now?
Yeah, over 4 years.
So when are you asking her to marry you?
Yeah, let's do this live.
I have spoke about it. I don't know, 2-3 more years. What's the rush?
No, there is no rush. I'm just curious. I mean, you're probably going to be with her forever if you've been with her for 4
Are
years.
y'all
Like,
going to
you're
get
not
a
gonna break
joint
up
bank
after 4
account?
years.
Are we invited to the wedding?
We invited
we
to the
share
wedding.
a lot of
asking the
bills
real
and
questions.
finances already.
Are we invited to the wedding in 2 years if you have the wedding?
I'll think about it. I don't know if I want I'm thinking about the heights. Like let's say
Tanner,
you guys
Tanner,
are my best
this
men.
is the fucking
and there's-
reason no one
there's
comes on your
Riley.
channel, bro. This is the reason no one comes on your channel. You just need to say the right things, and you say this dumb shit like, I'm doing some analysis of do I want these motherfuckers? Like, no.
Well, I'm just thinking, okay, I'm there. I'm the groom, and I got my best men, you three boys. And there's Tevis, there's Riley, and there's a Mitt down there. And we're all standing up there. This short little guy's can't wait for watch the bride go up there.
Oh, I
Are
don't
you
want to be
calling
a
me
best.
short?
I don't want to be a best man. I just want the open bar, man. I don't.
Yeah,
care. We're already in the same.
Yeah,
town.
obviously.
I don't have to travel.
No,
Wait,
but
how
guys
tall are you
are,
guys, Tanner? Are you 6 feet, Tanner?
No, I'm 5'11".
Okay, I'm 5'7", so I'm probably the shortest. Out of
How
all.
tall are
I've
you?
thought about putting 6 feet on like the Tinder profile back in the day. I mean, I was that close, but I was honest.
I'm 6'3".
Are you actually?
Wow. Oh boy.
Dude, us tall people have problems too. Okay.
Okay, let me end it off. I am thankful for this community, not necessarily the podcast, but the community.
Wait, Chris included?
Chris has to come to the wedding, bro.
Yeah, our Bears invited 100%. 100%.
No, but I'm super thankful for the 116 people that are obviously here right now. The fact that you guys take time. Look, the one thing I've learned about content in 2022 is you guys 100 people watching could be watching anything right now. And the fact that you chose us It's really cool, you know, because there's
Yeah.
trillions. There's an infinite amount of content you could be watching, and you guys clicked on us, and that's a hard thing for us to do, is to get people's attention. So
I was telling this to someone like literally earlier today, saying, you know, it's like I was looking forward to the pod tonight because I felt like, you know, it was like one of the last ones of the year, and how it doesn't sound like a lot of people because it's online, but if you imagine like 116 people live, like in a single room, like that's a lot of people.
That's a lot. That's a lot.
That's
Look
a
at
lot
this
of
little
people.
pup.
What's his name?
Sofi.
Bobby Joe.
Anthony.
Bobby Joe. Chris.
No, it's the family. I'm here for holidays. But
Okay, awesome.
if you see this setup, I'm at the old folks' home, and then if I'm at the other setup, I'm at home.
Gotcha. But yeah, I agree, Tevis. It's like if there was 117 people here right now, like live, us four on stage, like that's a lot of people, you know?
Right?
That's kind of crazy.
And they
So-
would all be older than us, which would freak me out.
Yeah,
Yeah,
and we're just
I-
shooting the shit up here. We don't even realize it.
Yeah, I doubt if there's anyone in the chat that's under 25, put it in the chat. I think there's very few. And I noticed this by March. I started noticing. I went into the YouTube analytics. I was like, shit, people. My audience is 35 to 50. I'm like, I'm a 24-year-old dude talking to these older people, and it's really cool because
You
know
didn't
older
think
people
at
are
like
more
at any point after seeing that analytics that like it didn't spark in your mind they have to like comb your hair every now and again? Like that
No,
wasn't
no.
thought?
What it actually sparked in my mind was the uniqueness of my channel. I'm young, I'm naive, and someone had an amazing comment on my channel the other day. They said the reason I watch Amit's channel is because I know way more about investing than him, but it's like this guy's on a quest and a journey to figure out the market, and I like being part of that journey. So and that's the most. I can't act like I'm the best investor. I know everything because that's not me, right? I have to be as authentic as I can be, and I think that's actually attractive to people. And the speaking skills I think are decent. So that's what we got.
Yeah, you're definitely an extrovert.
Yeah.
Although
All
you're
right.
in your room on Friday nights. All
That's
right.
what I was thinking.
A very
also
unsuccessful extrovert.
There you go.
All right, guys. Thank you all for joining. We'll see you December 30th on the recap, what we expect for SoFi 2023. Appreciate
Happy
you guys.
holidays.
Happy holidays.
holidays.
Enjoy with your family. See you next week.
See y'all.
See you guys.